Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, March the 31st, the year's 2022. Let's talk trading. Monthly wrap up with Walmal, and we'll also finish up the Trading Better series. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. So, Walmal, hope you had a good trading month.
It's been a very good trading month for me. I mean, personally, lots of problems, but trading wise, everything really clicked. It was really good, really successful. So I really can't complain about that.
Yeah, so for the month, we're 283 pips off the open, 140 off the low, and 297 off the high. And according to this seasonality indicator, the pound typically forms a bottom in early to late March and then moves higher into the end of April. So I guess we'll be looking for a move upward from this point.
Yeah, that's typically what happens. Does that mean it's going to happen? Oh no, but that's typically what happens, But at the same time, it can go and maybe help you with a bias, especially if you're a swing trader, or a long-term type of trader. That certainly can help you out. It can also help you out with when you go into a day and you're just not sure which direction it's really set up to go in. Well, maybe that little bias will go and help you out.
Yeah.
Or maybe not.
Well, we've got another bias to go long, which is the weekly pivot, which we've missed. In fact, we're almost 60 pips below it at the moment.
Yeah.
On the daily, we're smack dab, almost in the middle of the opening range for the week. As you can see, we popped out of the opening range on the high side for a bit yesterday. And then on Tuesday, we popped out of the low side for a bit. But so far, we've closed within the opening range 2 days. Also, for the year, we're 385 below the open at the moment. And we had an inside bar. Wait a minute. I might be on the wrong account. That looks like, yep, I'm on the wrong account. That's a Sunday bar. Oh, that's too funny. But let's see, what else do we have? We've got 42 pips on the day of range, but we've got, it seems like, let's see, I see 4, 8, 10, 12 pairs over 100 pips in range when the pound's not even half that.
Yeah, this is a big news day tomorrow. Plus we have the employment numbers coming out soon if they haven't come out already. I don't recall the time the employment numbers, the weekly employment numbers come out. They come out at 8:30 Eastern, so they came out last hour. But that's going to go and maybe have some people hold their powder until they find out what happens tomorrow with NFP.
Yeah, well, NFP should be a wild and woolly one. It's April Fool's too, so they're going to probably play a joke on us one way or the other.
Yeah. You said something earlier that was kind of interesting to me. How many pips did you say the range for the month was?
Oh, that's something I need to pull up. In fact, let me pause the video and pull up that screen. Okay, fellow traders, I uploaded another chart. We'll get to it in a second, and I also got the put the other set up the other account. So you can see here we've crisscrossed the daily open on this account a few times. On the other one, not so. You can see here we're barely breaking out of the buy zone and the sell zone. Now let's continue. Rats, not the range is really too low for rats, but you can see you can still play the ranges. In fact, Walmal mentioned to me that it was bouncing off the 40 and heading down. Walmal?
Yeah, in fact,
Yeah.
yeah, in fact, it just did it again. So it did it last hour, did it the hour before that. It did it this hour. Now it's done it a second time this hour. So it just kind of, you know, If you see a pattern, trade the pattern till the pattern breaks.
Yep.
Right now, you could have, if you got in with a nice entry, you could have made as much as 8 pips on it. Now it would only be worth maybe 4 or 5 pips, but still, hey, that's 4 or 5 pips. That's nothing to sneeze at.
Yeah. Well, actually, in that bar, that green bar on M15 looks like a return bar to me, so it's probably going back down to the 20s.
Yep, and that's the other thing that's been interesting about the about today, is the fact that you're talking about the day being pretty muted. I think you said before there was 42 pips on the day,
Yep.
something like that. And here's the thing: you got those big return bars sitting out there. If you got a method that goes and takes advantage of that, man, there's lots of pips that could be made up there. Because there are return bars that are green bars, and there are return bars that are red bars. And you could trade into that direction. And if it happens to line up with whatever your normal method is, eventually, man, that can give you some confidence to take that trade.
Right.
But I was asking you before, how many pips was the range for the month?
Okay, yeah. I'll go ahead and bring up that chart. The range for this month has been 438. It's so far it's the biggest range of the year.
Yeah, and here's the reason I was bringing that up. We look at the range, and here's the thing that really is that really puts us in perspective. And even with return bars, our range is only 438 pips. I'll pat myself on the back for a second, okay? Because I just went and did my books for the end of the month. Because I didn't trade today, but I had 729 pips for the month. I mean, but that's only a month that's only got 430 pips. How is that possible? Well, look at the day. Look at all the travel that happens during the day. Look at all the opportunities that you have to go and trade and then trade and then trade. And, just because, if you take 430 pips, and let's say there are 20 trading days during the month, that basically means what? It means that you have maximum, if you just do straight arithmetic, that says you can only go and make 20 pips a day. Wrong. That's a wrong answer. It's, because you got all that other travel that happens during the day. You just need to be consistent with your method, trade your method, manage your money, and you can go make a lot of pips just by going and doing that.
Exactly.
And that gets back to a point of of the whole idea of making yourself trade better. And it all comes down to that. It's sort of like you got to trade what you see, and trade your plan, manage your money, and I think we talked about this on the phone yesterday, Tira, where we talked about this whole idea of, I made the statement and said that the most important thing is money management, and you counted and said, no, the most important thing, is brain management, and yeah, I mean, I can argue either side. They're both incredibly important. The thing is, you can get into a trade for any number of reasons. There are, you go out on the internet, you search YouTube, there's thousands of reasons to take a trade. And I'm not going to necessarily say any one of them is bad or good. But what I will say that is bad or good is that you need to be able to, go and manage your emotion and your brain and how you treat things once you're in a trade, and you need to go and know how to get out of trades and when to get out of trades. And am I getting out of trade because I'm emotionally crippled, or am I getting out of trade because this is what my trading plan says to go and do?
Yeah, exactly. And I just switched over to the year to date accumulated range. And so far, we've got 749 between the high and the low. As compared to March in 2021, it was 788. But the day isn't over, so we'll probably have to put this chart up again tomorrow just to see if we've picked up any more pips today. We've still got a
Yeah.
lot of trading day,
Yeah.
and there's a few more statistics that I have in this indicator. Let's see, we can show the high by the month, the low by the month, close minus open, so we can see just how far away. So this year, the 3 months have been red. So January was red, February's red, March is definitely red. We're 285 below the open. at the moment. Let's see, we can show close minus the year-to-date open. We've already seen that. Oh, show the ATR. 430 pips is the ATR over the last 14 months. No, I'm sorry. Yeah, as opposed to we had 2021 was much bigger. It was almost an anomaly. But yeah, looking at this, you can see back in 2009, 2010, 2008, the ranges were just huge. ATR compared to what it is, it's like about half now. So
Yeah. I think part of that is that, back then a lot of it was because of, that's when the real big push of getting people to start trading, Forex really started to happen. So you had a huge influx of money that came into the Forex market just from the retailers.
right.
Not that the retailers come anywhere near what commercial institutions and governments put in there, but it still was a huge amount of money that got dumped into Forex,
right.
Which just because that increase in cash sitting out there is going to cause more movement.
Right. So the pivot trading plan said price near the pivot point bias in short. That's paid off a couple times. In fact, we just crossed above the pivot just as I said that. So we've taken out today's pivot. As I mentioned earlier, we still missed the weekly pivot and we've missed the monthly pivot. So and the monthly pivot was 34. 43. So we're 311 pips off of that at the moment. But when you look back, we haven't missed a monthly pivot since November of 2014. So, you might want to look forward to that pivot being taken out. We're in the upper wick zone of yesterday. The higher low looks like we're going to get a signal short possibly sometime soon here. The Walmal lines paid off this hour, a short at 30. There was a long at 40 that might have tricked you, but since you made that observation, if you look left, you might not be so keen on taking that long, or you might say, well, hey, it's tested it, a few times today, but for some strange reason, it really only closed above it once since it closed below it. So that doesn't bode well.
I would have never have taken that trade. Now, what I would have done is if one of these times that it crossed it went up, and let's say it broke, 04 or, 03 or 04, I may have taken it at that point in time, especially if I would have gotten a 1 minute or especially a 5 minute close above it, then I might take it. But with the history that we've seen over the last couple hours, that would not be a valid Walmart trade. And that's trading better. That whole concept again. That's something to really keep in mind. The rules don't say what I just said and what you just went and said, Tiro. But the reality is, there's another rule that's just as important, if not the biggest rule, and that is, you say it all the time, and that is trade what you see. Well, if I can't get above 40, why would I take a trade to go above 40? Wait for it to be proven otherwise, then go and take the trade.
Yeah, it's testing it once again right here. So, but it's like sooner or later it's got to break, and when it breaks, it's probably going to break huge.
Right. But even if it does that, usually that's what I'm saying. If you can get a close above 03 or 04 or something like that, at that point in time, especially on a 1 minute or a 5 minute, candle, then at that point you still have the opportunity to go in. So if you look at what it just failed again,
right?
And so now this 5 minute candle is not over, got another 50 seconds or so in it, so it may come up and try it again, and you're right, it may bust out. But here's the thing, okay? You don't take that trade because this hour it tested at 1. I'll even count. I'm looking at 5 minute candles. 1, 2, 3. And this is the fourth time. I would have taken 3 losses potentially. At this point, and let's say this one actually does bust through and gets me 10 pips. Well, I'd have to go and make up 4 losses, and let's say it took 7 pip losses on each of those. That's 28 pips I got to go and make up.
Yeah,
To me, that's
and guess what? We're out of time. This is the Rumpled One, over and out.